The resilience of the Canadian housing market has been a surprise, especially for those who've been forecasting declining sales and prices. Canada's housing market reached new heights in 2020 and broke multiple records along the way. And prices have grown faster than anyone could have ever predicted. So does that mean the Canadian housing market crash has been cancelled? This is your housing market update for February 2021, and let's find out. What's up, everybody? Welcome back to the channel. I'm your host, Danish, and I make personal finance, investing, and real estate topics easy to understand and keep up with. Let's bounce right into the numbers. Canada's home sales jumped 7.2% on a month-over-month basis, going from November to December, to set another all-time record. Greater Toronto and Greater Vancouver both experienced gains of more than 20%. Actual sales activity posted a 47.2% year-over-year gain in December, the largest year-over-year increase in monthly sales in the past 11 years. For the sixth straight month in 2020, sales activity was up in almost all Canadian housing markets. For 2020 as a whole, over 550,000 homes traded hands, a new annual record. In a time when businesses are shutting down, jobs being lost, a global health pandemic, Canada's housing market is busy setting new records and taking names along the way. If you're wondering, what will 2021 bring? All signs are pointing to a very active spring market. Honestly, at this point, I'm in awe of how desensitized everyone has become to these massive price increases. 20% year-over-year increases are just not normal, nor can they be. At some point, there is going to be a squeeze where income levels just can't support a mortgage payment. There is a limit. At this point, it's just a matter of time. When do we actually hit that limit? Sure, you can keep squeezing your monthly budget, take on as much debt as possible based on your income level. But at some point, you'd run out of an income to squeeze. So then what? Do you move to other areas of the country where you can get much more out of your income than your current area? Will the jobs follow? Will the work from home trend continue? Only time will tell. Nationally speaking, the average price of a home in Canada is now over $607,000. That's a 17% year-over-year increase. Let's dive into the regions to see what's actually happening in the local markets. First region, Yukon and the Northwest Territories. The average price for a home in the Yukon is now over $433,000. That's up 3% year-over-year. Believe it or not, the housing market in the Yukon is actually heating up. Even though the capital of Yukon, Whitehorse, only has a population of about 25,000, but it is growing. Whitehorse has one of the lowest unemployment rates in the country, coming in at 3.6%. There are a ton of jobs and natural resources. I might be letting the cat out of the bag, but Whitehorse is actually one of Canada's best kept secrets. Small population means less traffic, a ton of outdoor space, and super clean air. You just have to keep the weather in mind. The average price of a home in the Northwest Territories is just shy of $368,000, which is up 2.5% year-over-year. A decrease in the population, especially among young adults, high cost of construction, land availability, are all leading to housing declines in this region. First province up, British Columbia. The average price of a home in BC is just under $844,000, which is up 12% on a year-over-year basis. The average price is much higher than the national average, but the price growth itself is lower than the national average. Looking at the graph for cities in BC, on the right-hand side, you'll see the percentage increase year-over-year shown by that blue line, and the month-over-month increase shown by the yellow line. On the left-hand side, you'll see the average price as of December 2020. Kamloops, to me, is a standout with a giant 17% year-over-year increase, but also experienced a little cooling off going from November to December with a 2% price decrease month over month. The large year-over-year increase is because it's one of the few areas where the average price is still below $500K, but it doesn't look like it's going to stay that way for long. Greater Vancouver, Vancouver Island, and Victoria are up between 5 to 6% on a year-over-year basis. Meanwhile, Chilliwack is up close to 10% on a year-over-year basis. The average price in Greater Vancouver is up well over $1 million, and going by the month-over-month increase, the momentum is still there for future increases. Overall, BC's housing market capped 2020 with record high home sales in December as buyers scooped up properties across the province. This red hot housing market is reflecting exceptionally low mortgage interest rates and the increased space requirements from those working from home. If the job market continues to shift more towards remote opportunities, we're only going to see more and more demand for housing in the suburbs. Across BC, 8,345 homes were sold just in December alone. That's up 60% year over year and almost 80% higher than the 10-year average for December. In 2021, Chilliwack is expected to be one of the hottest housing markets, with some forecasts calling for a 20% increase in 2021. A strong economic recovery in BC and these ultra-low mortgage rates will only continue to further drive demand in 2021. And the problem is, a very tight supply and housing inventory will just push those prices even higher. I'm going to summarize the BC housing market. It's really hot, super hot, and it's not slowing down anytime soon. It's insanely competitive, multiple bidding wars, and first-time homebuyers are continuously getting priced out. Moving on to Alberta, the average price for a home in this prairie province is around $395,000, which is up close to 3% year over year. As you can see, both the average price and the price growth are well below that of the national average. Alberta's economy is struggling, and there is no denying that. You can see the reflection of this in the housing market. The largest year-over-year gains came from Edmonton and Fort Mac at 2.7%, whereas Grand Prairie is down 3.7% on a year-over-year basis. For those that say housing never goes down, it can go down, and it does go down. Just look at Alberta as an example. Fort Mac's housing market is down 18% in just 1 month. It wasn't too long ago when Alberta was a booming province because of the oil market. It just goes to show you how quickly fortunes can turn, because now Alberta is hurting because of that very same oil market. All 4 of these areas in Alberta are within 100K of each other, with not much price differencing between them. But it's not all doom and gloom for Alberta. There is demand starting to come back from previous years of slower activity. Those that are priced out of areas in Ontario and BC are now actually starting to look at Calgary as an alternative. For 2021 in Alberta, on average, prices are expected to remain relatively flat, with some cities possibly seeing a modest increase. The reduction in demand for oil will continue to be a major factor driving housing prices in the province. It'll be interesting to watch the spring market to see if easing the restrictions encourages more buyers to get out there, as likely some buyers are probably holding back. But at the same time, if there continues to be further consolidation in the energy sector, this could bring further unemployment to the region. With these new layoffs, people will need to adjust their housing needs to match the employment situation. Next up, Saskatchewan. The average price is $275,000, which is up 1.7% on a year-over-year basis. Similar to Alberta, both the average price and the year-over-year growth is below that of the national average. There is a major divide here, where the average growth Canada-wide was 17%. Compare that to Saskatchewan's average growth, which is less than 2%. When looking at this graph for Saskatchewan, Moose Jaw is showing up with a monster 42% year-over-year increase. That is insane growth. It's almost like if someone's talking about a high-flying stock going up 42% year-over-year. Meanwhile, Regina and Saskatoon saw year-over-year growth rates of around 6%. Moose Jaw also had the largest month-over-month increase at 15% in December compared to November, where Regina and Saskatoon both saw small declines. Notice how all 3 cities have housing prices that are within 40K of each other. The reason for that major increase in Moose Jaw is that buyers are more interested in purchasing a home in the suburbs away from the city centers. This is no different than the ongoing trend we've been seeing across the country, where buyers are focusing more on the suburban markets. For 2021, Saskatchewan is expected to remain a balanced housing market. If you have a housing budget of about 300K, you have your pick of cities, whether you want to live in the city centers or the suburbs. Moving on to the last prairie province, Manitoba. The average price in this province is about $304,000, which is up 6.6% on a year-over-year basis. Similar to what we saw in the other prairie provinces, both the average price and the year-over-year growth is below that of the Canadian national average. This should not come as a surprise if you've made it this far in this video. Manitoba, just like the other provinces, is seeing the same shift away from city centers to the suburbs. This is why Brandon, Manitoba is up 27% year over year, while Winnipeg is up 7.6%. The price differences between the two cities is now less than $50,000. There is a strong pricing momentum in Brandon, which saw a 10% increase just going from November to December. According to a recent survey, half of the residents in Manitoba want extra space in their homes for workouts. This placed higher on the priority list than having a dedicated home office. In Manitoba, if you're selling your home now, you'll have a revolving door of buyers to choose from. But here's the other side. If you do sell your home at a higher price, you'll still have to buy a new home in a very competitive market. The housing market in Manitoba is a lot more competitive than compared to the other two prairie provinces. Expect to see a continued competitive housing market in Manitoba as we move through 2021. Up next, Ontario. The average price in the province is around $751,000, which is a 20% year-over-year increase. This is the province that's driving up the national stats, which is why both the average price in the province and the year-over-year growth is higher than the Canadian average. The city that should jump out at you when looking at this graph is Windsor, which saw an insane 35% year-over-year growth, with the average price in the city now close to $440,000. Just between November and December, the price grew 6% in 1 month. The city with the smallest year-over-year growth is actually Toronto, with an 11% increase. I can't believe it's come to this, where I have to call an 11% annual growth rate small. Can we take a moment here to realize how desensitized we've become to abnormal price growth? I don't know what to say. It's crazy. It's crazy. Moving right along, the York region and Oakville Milton are both well over $1 million, but still they managed to see a 15% year-over-year increase. Sault Ste. Marie, Barrie, Niagara, Kitchener-Waterloo, Ottawa, Durham, Hamilton, Burlington, Cambridge, they all saw increases between 20 to 25%. Guelph, Kingston, Thunder Bay, they saw annual increases between 15 to 20%. And Mississauga saw an annual price growth of about 13%. If you're looking to buy a home in this province and your housing budget is $500,000, then you only have 3 options: Windsor, Thunder Bay, or Sault Ste. Marie. However, at that growth rate that Windsor is growing, I'm not sure if it's going to be on this list for much longer. It's going to cross that $500,000 mark, I'm sure, before 2021 ends. The harsh reality that local residents face in Windsor is that young couples and first-time homebuyers are competing from out-of-town buyers like Toronto, who are selling their homes and condos for a lot more, which means they have a lot more to spend in areas like Windsor. If you bought a home in Windsor just a few short years ago, I'm sure your home value has doubled, maybe even more than doubled. And because of the housing inventory shortages we're seeing, I'm sure price growth will still be very strong as we move through 2021. The GTA suburban housing market is ultra competitive, and you've seen some regions have growth higher than 20%, and that heat just isn't letting up. Instead, it's getting hotter with each passing month. This combination, a market that's hot and is only getting hotter, especially given our current economic situation, to me, that's very concerning. This is why people are leaving the GTA in search for more affordable housing, especially if you've already been priced out. One example is Barrie, which has turned into one of the most sought after real estate markets in all of Ontario, appealing not only to just families, but also investors. Barrie is located about 45 minutes north of the GTA. At the time of this recording, homes in Barrie cost about half as much than what you would find in the GTA. As of right now, all signs are pointing towards an increase in sales activity and housing prices reaching new heights in 2021, but not without risk. Let's check out Quebec. The average price in the province is around $401,000, with a price increase of close to 19% on a year-over-year basis. As you can see, the average price is less than the national average, but the price growth itself is higher than the national average. Looking at the graph for Quebec, Gatineau and Montreal continue to be hot housing markets with price growth between 18 and 20%. If Montreal sees a price growth of 20% in 2021, then the average price will officially pass the $500,000 mark. With the growth rate that Montreal is experiencing in pricing, it's becoming less and less affordable for local residents. There is so much pent-up demand in the housing market right now, and factor in the very few homes even available for sale. Even if there was a wave of new listings to hit the market, I don't think it's enough to bring the prices down. Consumer confidence is what typically drives the market, which is based on employment and partially interest rates. With interest rates lower than they have ever been, those who can afford it are hungry to scoop up properties, and those who cannot afford it will have no choice but to look elsewhere. Many of the jobs lost in Quebec have been lower wage positions, which typically is either in the service industry or the hospitality industry. And these workers are more likely to be renting their home versus owning a home. Moving forward to 2021, for better or for worse, Montreal will continue to be a seller's market. Heading now to the Atlantic region. The average price of a home in New Brunswick is just shy of $200,000, with an average growth rate of 11.6% year over year. This is one of the few places left in the country where you can still find a home for less than $200,000. The average price in Nova Scotia is around $320,000, with a 22.3% year-over-year increase. Notice how it's growing much faster than the national average. The average price in Prince Edward Island is $307,000, with a year-over-year increase of 22.5%. Similar to Nova Scotia, it's also growing much faster than the national average. Newfoundland and Labrador, the average price is around $283,000, with a year-over-year growth rate of 6.2%. This province has the lowest growth rate among the Atlantic provinces, and both the average price and the growth are below that of the national average. Looking at the graph, Moncton and Halifax saw year-over-year growth rates of 19 to 20%, while Fredericton and Cape Breton are around 25 to 28%, leaving St. John's the odd man out with a 2.3% year-over-year growth. Month over month, on the other hand, Cape Breton saw a massive decline of close to 22% going from November to December, while St. John's had a month-over-month decline of 40%. It'll be interesting to see where this trend leads St. John's in 2021. The Halifax housing market should continue to favor sellers in 2021, with limited supply in housing and rising prices. But it's not just Halifax. The majority of Atlantic Canada is a seller's market, and is expected to continue that way in 2021. In Moncton, Halifax, and St. John's, housing activity has primarily been driven by out-of-province buyers and move-up buyers who have either expedited their retirement plans or are working from home and no longer need to be in an office. Here's the thing, low inventory has been a common trend among many of Canada's housing markets in 2020, and I'm sure will be a major factor driving prices even higher throughout 2021. Now that we've covered the country in terms of what's happening in the local housing markets, I want to take a look at what are the 5 most expensive areas of the country and which of the 5 areas are still considered to be the most affordable. The 5 most expensive areas are Oakville, Milton, the York region, Greater Vancouver, Mississauga, and Greater Toronto. 3 of the 5 areas on this list are well above $1 million, and I'm sure the remaining 2 will be crossing the milestone very, very soon. Not only that, but 4 of the 5 regions are in Ontario, with the lone city of Vancouver representing BC. These 4 Ontario markets saw hefty double-digit gains throughout 2020. Shifting gears to the 5 most affordable areas of the country, we have Cape Breton, St. John's, Fredericton, Sault Ste. Marie, and Moncton. 4 of the 5 areas on this list are from the Atlantic region. Excluding St. John's from this list, the other 3 Atlantic cities are seeing gains between 25 to 28% on a year-over-year basis. Sault Ste. Marie is the lone Ontario city on this list, but saw a price increase of 25% on a year-over-year basis. The stat to watch in 2021 will be new listings, particularly in spring. What you want to see is how many existing homeowners are going to be putting up their homes for sale. We know that the demand is strong, and as of January 1, 2021, there were around 100,000 homes available for sale across the country. There was a point where you would easily see at any given time at least 250,000 homes available for sale across the country. We're at a point where there's insatiable demand for the housing market, but we're also facing a major supply shortage in 2021. When you have demand like that, outpacing supply, prices almost always go up. Here's another fun fact. If no new homes were to come out on the market for sale, it would take 2 months for Canada to run out of housing inventory. Same scenario, but for Ontario, housing inventory would run out in less than a month. This is the reality we find ourselves in today. I have links to promo codes in the description below for various discounts and sign-up bonuses. This helps directly support the channel, and I can continue making content like this, so please do check them out. Do you have questions for me, feedback on this video, or maybe ideas on future content? Make sure to leave your thoughts in the comments below. And while you're at it, make sure you've also hit that like and subscribe button. And I'll catch you guys in the next one.